All right, guys, welcome back to Father and Son Investing. We're talking about Teledoc today. There's been some move in the stock price. We'll talk about why that is happening today and whether that will continue to happen over the next few months. How high will the stock price go? And should you buy Teledoc now? Stay tuned. All right, what's going on with Teledoc's stock price? In February, it was close to $300 a share. Recently, it's been as low as about $170 a share. That is a massive drop over the last few weeks. Why is that happening, and what happened today? Why has the stock price dropped so much? Well, I think there's many factors involved. The first one is that just medical stocks in general have been decreasing. That just happens sometimes. Certain sectors get into cycles, and it seems to be the medical cycles going downward right now. Now, why else? We all got excited about vaccines, and it sure seemed like vaccines were going to make life much better for us and maybe get back to our routine. And people assumed that one of those routines would be that they would stop using telehealth and maybe go back to more in-person visits. Something happened today that affects the stock price and maybe affects that plan. What was that? Well, this was the news this morning. The United States recommends pausing the use of Johnson & Johnson vaccine because of blood clot concerns. In particular, from what I understand, it's a particular type of clot. It's called cerebral venous sinus thrombosis. And essentially what that means is, you have blood that goes into your brain from arteries, and the way that it gets out is it drains into these venous sinuses, which are, kind of like veins. And that's how the blood drains out of your head. So if these cerebral venous sinuses thrombose or clot off, blood doesn't drain out of your head very well, and that can cause a number of problems, including strokes. So what has that done to a number of the stay-at-home stocks? Well, for Teledoc, you can see that this is the one-day graph. It shot right up this morning. It got up to a high of about 192, and it's come down a bit since then, but we're still looking at about 189. That is a nice increase. Now, the trend was already kind of bottoming out. The Teledoc curve was sort of maintaining that 170 to 180 range there for a number of days. I think this vaccine news is going to help Teledoc's stock price. Now, their business was already doing quite well. We're going to review how they have been doing. Now, Teledoc makes revenue in a number of ways, two of which are access fees. Those are essentially membership fees that are paid by health plans or employers so that their employees or their beneficiaries will have access to Teledoc. That's about $13 a month per member. They make a lot of their money from that, and in fact, they manage to hold on to those subscribers 90% each year. So year over year, 107% growth for 2020 in that category. And then they also make money from visit fees, and that was 132% growth year over year for 2020. Now, they also have some new ways that they're making money. They are, obviously with Livongo, they have gotten into managing chronic health conditions, and so they now have a new metric that they're using called chronic care enrollment. That we can't give any growth on because they weren't measuring that before. Obviously, they just acquired Livongo during 2020. But on their conference call, they talked about how that is becoming an emphasis for them to manage chronic care, and that will be another driver of their revenue. Now, another acquisition that Teledoc made during 2020 that is a little less well known is a company called InTouch Health. They are also a telemedicine service, but they are designed for really emergency department visits and inpatient care. So if a psychiatric patient goes to a rural emergency department where they might not have a psychiatrist on call, they can access psychiatry via telemedicine and be able to help treat that emergency department patient. Or say in a smaller hospital that doesn't have a NICU, a baby is born that's having difficulty, they can get on InTouch Health with a neonatologist who can then consult them for however long until that baby can be stabilized. So this is another way that Teledoc has expanded their circle of care. They can now take patients from in the hospital and move them on to their Teledoc service for follow-up potentially. And then if they have chronic conditions, they can also manage those. They are truly expanding their services. So where might the stock price be going, especially given some of the difficulties now with the Johnson & Johnson vaccine as well as with the AstraZeneca vaccine? If we go to tip ranks, we can see that a number of analysts, if we put them all in average, are saying that Teladoc stock in the next 12 months, we're looking at a price target of $257 per share. That ranges from a high of $300 to a low of $220. If we take the average, we're looking at an upside of 37% roughly. Now, even though people were expecting Teledoc to do less business as the pandemic improves, they're still going to increase their total revenue up to, they're saying $1.95 billion to $2 billion. That's an 80% increase. And they expect their total visits to be between 12 million and 13 million, which would be a 13 to 23% increase. The company is still growing. They may not be growing quite as fast, but still growing. And they have expanded their product lines now. I think that people are going to continue to use Teledoc. In fact, I read something that said that before the pandemic, only about 10 or 11% of people would consider using telemedicine, and now 70-something% of people say that they would use telemedicine. I've had a couple of telemedicine visits in the last year. Quite honestly, it was way more convenient to just wait for the doctor to page me on my phone, essentially, when it was my turn, and log in and talk to him, rather than go sit in the office and wait around and then wait in the waiting room. In fact, the last time I had to go, I just had a kidney stone recently. I did that, and then I went into the exam room, and the provider never touched me the whole time. We just sat and talked from 6 feet apart. I could have easily done that visit as well with a telemedicine visit. In fact, I would have preferred to do that visit via telemedicine. That's it for Teledoc then. I think the stock price has hopefully bottomed out. It may go down just a little bit more, but I think some of this vaccine news is going to make people realize that this is not over and that telehealth and telemedicine is still a viable option and a valuable option. It's a great time to buy, down from where we're saying, even if it gets to 220, you still got a 38% upside. So consider it. Again, this isn't financial advice or medical advice, but I own Teledoc stock, and I think it's still a fantastic company. I plan to stay in it for the long run. Until next time, enjoy your investing.